Hello, welcome to the European Open briefing for Thursday, November the 2nd. I'm Ravi Bharjan, currency analyst at XM.com, and we're going to be taking a look at what's happening in the currency markets today. The US dollar is a little bit softer this morning ahead of the big risk events of the day, which is President Trump's announcement of who's going to be the next Fed chair, as well as the unveiling of the Republicans' tax bill. Those will be happening both in the US session later on. Yesterday we had the Fed policy meetings. They held rates unchanged, but there wasn't much of a response in the Forex markets to that. The pound is holding rather firm near yesterday's highs ahead of the expected rate hike by the Bank of England later on. The notable gainers this morning are the Australian and New Zealand dollars on the back of solid data for the respective countries, and oil prices are slightly down after reaching fresh multi-month highs yesterday. Let's first start with the US dollar. We can see the dollar index is fairly steady around 94.65. Dollar yen yesterday attempted to break above Friday's peak of 114.44, but it stalled just below 114.30. It is just about managing to hold on to 114 yen level. We had more robust US data yesterday. The ADP employment report showed there was a big rebound in private sector jobs hirings in October, following, of course, the weak September report on the back of the hurricanes which affected the figures, both the ADP and the official NFP report. The non-farm payrolls numbers are the official numbers are due tomorrow, and they are also expected to show a big rebound. But given that a Fed rate hike is for December is pretty much priced in now, they're unlikely to have a significant impact. We also had the RSM manufacturing PMI yesterday. Those actually disappointed, but they were coming off the 13.5-year highs we saw in September. So given that, there were still very good figures. The Fed, we had the FOMC meeting yesterday. They held policy unchanged. The rates were held steady at a range of between 1 and 1.25%. There was a slightly more upbeat tone on the economy. The statement said economic activity has been rising at a solid rate versus rising moderately in the previous statement. So this possibly is the strongest signal the Fed will be giving about a December rate hike. There have been reports pretty much confirming that Fed Governor Jerome Powell will be the next Fed chair. The official announcement is expected at around 19 hours GMT. We saw US Treasury yields fall back a little bit after those reports, which was, according to several sources, close to Trump revealing that reportedly Jerome Powell is pretty much as expected will be the next Fed chair. So that did weigh on the dollar a little bit yesterday, and also in focus will be Republicans in the House of Representatives unveiling their tax bill at 13 hours GMT. This was due yesterday, but there was a delay given strong disagreements within the Republican Party on various aspects of the bill. If we do see another delay, that would be potentially negative for the dollar, and also even if it is announced, even if that does come today, it's going to be important to see what they would have decided on the corporate tax rate. There were reports previously that could be phased in gradually, and if that is the case, that would potentially be slightly negative for the dollar. Let's move on to the pound now, because we do have the Bank of England policy meeting later today. They are expected to raise rates by 0.25 percentage points to 0.5%. The announcement will come at 12 hours GMT. If they do raise rates, this would be the first UK rate hike in more than a decade. Those expectations drove the pound to a 3-week high of 1.3319 yesterday, and a 4.5 months high of 0.8730 against the euro. Also, we have seen some positive developments on the Brexit front, but we could potentially see some political uncertainty. There is several accusations being made at several MPs. So there is a wave of sexual assault allegations being made against UK lawmakers that's sweeping Westminster at the moment. The first casualty is the Defence Secretary Michael Fallon. He resigned following some allegations, and it is possible we could see other cabinet members being forced to resign, and that could spell trouble for Theresa May's fragile government. But in the Forex market, so far at least, there's been a very limited reaction to that, but that's something that could potentially impact the pound in the coming days. Quick look at the Aussie and the Kiwi. We did have some very good data out of Australia. Recent data had been on the weaker side, but today we had building approvals numbers for September, which showed a bigger than expected rise, and that pretty much confirms that the housing construction boom is still ongoing in Australia. The trade surplus was also good. It rose by more than expected, and exports surged by 3% on the back of strong exports of iron ore and gold. The Aussie is currently trading just above the 0.77 level. It is slightly down from earlier highs, but clearly off recent lows where it fell to around 0.7640. The New Zealand dollar yesterday was boosted by better than expected jobs numbers out of New Zealand. That helped the Kiwi recover from 5 months lows, and also we could see some shift in sentiment for the Kiwi as the recent sell-off appears to have been overdone. It's unlikely we're going to see too much of a significant impact from Labour's economic policies, and that was the main factor driving that sell-off. Although the biggest concern is the impact on foreign investment, but overall, markets may have overreacted to the changing political scene there. And finally, looking at oil prices, we can see WTI crude here yesterday hit a 10 months high of $55.22 a barrel. Brent crude reached a more than 2-year high of $61.70. Of course, those gains in oil prices come on the back of signs that the oil market is finally rebalancing. But yesterday's EIA report helped that profit taking yesterday. US stocks, although they did fall by more than expected, the EIA report showed that US output and exports were both up last week. Also, the Russian output increased in October, so this offset the recent reports that OPEC compliance was strong in October, but overall oil prices remain very much in bullish territory. The Canadian dollar, it hasn't been as strongly correlated with oil prices recently, but speaking before lawmakers in Parliament, Bank of Canada Governor Stephen Paulos did say that there is still a strong relationship between oil and the Canadian dollar. We can see that USD CAD has met strong resistance around 1.2920, helping the loonie rebound to around 1.2820. It's slightly off those highs at 1.2849 at the moment. Paulos also, in a way, acknowledged that the economy is slowing now, and that would potentially lead to a weaker loonie in his remarks to in that testimony yesterday for the Bank of Canada Governor Stephen Paulos. And looking at today's economic calendar, we can see the Australian data there. We also had the final reading of the Eurozone manufacturing PMI, which was revised slightly lower to 58.5 in October. We've got the UK construction PMI coming up shortly, as well as the Bank of England meeting. In the US session, we've got weekly jobless claims and labour costs and productivity figures for the third quarter, as well as speeches by Fed Governor Jerome Powell at 13:30 GMT and New York Fed President William Dudley at 17:20 GMT. The speech by Powell is not related to that Trump's announcement, by the way, but that announcement is also up, of course, later in the day. That's it from me. Thank you very much for watching, and have a great day.